I want us to look at this thing called IFRS 18. Now, I hope all of you know there is this thing called IFRS 18. I hope you know that there is a technical article on IFRS 18, okay, which I covered with my student in the September exam. Full course student, I covered this in very detail also. Is this article. Okay, now, in this article, the very important thing is actually the format of the SOPL, which is we now have operating, investing, financing, income tax, and discontinued operation, these 5 categories in our SOPL. So it is very important for us to know which expenses or which income goes to which category lah. Now, the most important is actually operating, investing, financing. How do you differentiate these 3? And then with these 3 categories, you will see that we have a new subtotal. Like operating profit is new, profit before financing and income tax is new, and the last one is called profit, not profit for the year, just profit. So you need to be able to know the compulsory subtotal, operating profit. Operating profit basically is the profit from operating activity. And then PFIT, profit before financing and income tax, is actually operating profit plus investing activity. And then after this, you plus the financing, you get the profit before income tax. Then less the tax expense, which is the income tax category, then you get the profit from continuing operation, then discontinued, then one word profit lah. So the wording you need to remember. Okay, and SBR examiner actually require us to state in our answer, like whenever we say something is recognized in the SOPL, is it operating, is it investing, or is it financing? Now, the exception is if it is tax. Normally, we don't say tax is in income tax category because tax is tax is, we assume it's tax. I mean, like for example, tax expense, deferred tax. Deferred tax is not in operating, investing, financing. It's actually in income tax category. So normally that one you don't need to mention is okay. But the rest you need to mention like operating, investing, or financing. Everyone, so far you with me? If you are with me, you type 666. Are you with me? In our answer in SBR, we need to state which category. Okay, you're with me. Good. Now, everyone, I would like to tell you more about these 3 categories. How do we classify them? And I will give you more example, even more than what I teach you in the September sitting, so that I want you, like when you go to SBR exam, you will be able to apply this very confidently. Okay, the first thing that you need to know. Wait a minute. Okay. Yeah, the first thing you need to know is under here, there is this thing called the specified main activity. Okay, this is the thing that you need to know. Specified main activity. Now, everyone, what does it mean? It means you need to, in determining whether is it operating, investing, or financing, first thing we check is the business activity of the company. And this is very specific. It's only these 2 you need to look at. First thing, is the company involved in the business of investing in certain types of assets, such as the debt and equity investment and investment property. Okay, so that is the meaning. Then the second one is the customer business providing financing to customer, such as bank? So if yes, then whatever income they earn from this investing or financing, it will be under operating. No? That's the idea. Everyone, you understand this or not? If you understand this, you say yes. Can you understand this? If they have this specified activity, then this kind of activity is their operation. That's all. Okay? That's all. That's the thing that you need to know. Okay, I give you one example. Now, let's say if I'm a bank, I charge interest to my customer. For loan to my customer, the interest income is my operating income. Okay, it's my operating. It's not under investing already. Okay, then let's say if I borrow money so that I can lend you money. Okay, I borrow money so that I can lend you money. So I will pay interest as well. Now that interest expense is also operating because of it relates to me providing finance to you. Okay, that's the meaning. Now, what about this one? let's say if my main business is to invest in investment property, okay, like it's like my whole company, I don't do anything else except for investing in property. Then my specified main business activity is investment property. So if I earn rental income from investment property, operating lease, rental income, operating. Then if I have depreciation on investment property, operating. REITs, no? Like REITs, it can be this one, REIT, Real Estate Investment Trust, it can be under this. Then if I have fair value movement on the investment property, also under operating. If I have gain or loss on disposal of investment property, and also under operating. That's the idea. Now these are what we call the exception. So the first thing we check is actually this thing. Okay, it's actually this. So if every question you see the SBR question, then you see this one. Like example question 1, they tell you manufacturing group. So you know this question, this doesn't apply already. Okay, this doesn't apply. The question will always tell you this. That's the first thing you check. Okay, now everyone, let's talk about each category in more detail. Ayo, my webcam really. Okay, let's talk about this category in more detail. Sorry, no, not operating, operating category. Okay, operating category. Everyone, operating category basically is what I call the rubbish bin, right? Rubbish bin. Okay, don't write this in exam. But what I'm trying to tell you is, if something is not investing, not financing, not tax, not discontinued, it is under operating. That's the idea. So, like, example that you must know that is under operating is like, for example, if it relates to my sales or purchases, okay, if it relates to my sales or purchases, it has to be under operating. Then if it relates to like pension plan, something on current service costs, okay, current service costs past service costs. If you learn about pension, you know what I mean. Okay, so this is under IAS 19. It will be under operating. Okay, what else? This one. In console, contingent consideration. Okay, contingent consideration. We know that this one we measure at fair value. When we calculate goodwill, sometimes the question may have contingent consideration where we need to measure at fair value. The changes in the fair value is recognized in the SOPL. Which category? Operating. Okay, this one I never say it clearly before, but now I hope all of you know. Contingent consideration, changes in the fair value is in operating. Okay, it doesn't fulfill investing and financing. And this is confirmed in the standard. I actually read IFRS 18 to find out this. So that's why I tell you. The technical article didn't say, but I want you to know. Okay, so question, to confirm if my business nature is manufacturing, the fair value movement up and down investment property is investing. You are right, Hui Sing. 100 marks for you. Okay, you are right. If business nature manufacturing, then this investment property really is investing in nature. So that's why it's investing. Okay, good. So operating categories like this. Okay. Any things that deals with like PPE, such as depreciation, impairment. Okay, depreciation, impairment, gain or loss on disposal, it will be under operating as well. Okay, here you can think of it like receivable. Okay, wait, actually I should write receivable as another line. Receivable. Trade receivable, let's just be clear. Anything related to trade receivable will be under operating category. For example, everyone, sales, interest charge to customer. Okay, interest charge to customer. Example, late payment. Okay, late payment. Customer pay you late, you charge them interest. Sometimes they call it as penalty on late payment. Now, because this area, we used to be confused. I used to be confused also. So I thought, interest charge to customer, is it under investing? No, it cannot be investing because trade receivable is your main customer. Okay, so it cannot be investing. It is actually part of your operation. You earn the interest. So if this interest income is under operating. Okay, what else? Research and development cost. Yeah, I think R&D is also here. R&D, because I believe that is your business activity. Correct. Impairment of trade receivable. Impairment of trade receivable, the expected credit loss, ECL, expected credit loss, it will be under operating as well. Okay, operating as well. Research and development. Okay, what else? Goodwill impairment. Yeah, correct. Goodwill. Yeah, goodwill impairment. It will be under operating. Should not be under elsewhere. Okay, operating. Let me see. Okay, impairment done already. What else? Because I scare I miss out some very important one. Impairment loss. Asset remeasurement. Okay. Okay. Yeah. Oh, one more. Yeah. Okay. Subsidiary. Which is consolidated. Consolidated subsidiary. Very likely is under operating. Okay. Consolidated. Unconsolidated is under investing. Consolidated is under operating. Okay, consolidated, like you know, the PPE gain or disposal is here. The disposal of PPE is here. There's one thing that I want to tell you which we may have forgotten. Share-based payment. The cash settled. The cash settled, we need to remeasure to fair value also as at the year end. So this one, the gain or loss on the fair value in SOPL, it is also in operating category. Okay, so penalty on late payment, is it included penalty charge to related party on the late payment? Xiao Guo, I don't think SBR will ask about this. Okay, but you need to assess what is the relationship between you and the related party. Like, because related party can arise because of a lot of things. Like, is it related to the loan you provide to them? You know, if is it part of your operation or what? We need actually more assessment. Cannot conclude like this. So that's why I purposely just now mentioned is trade receivable. Okay, trade receivable. Okay, finance lease. Okay, finance lease. Okay, let me. For your info, contingent consideration, we don't do unwinding or discount. Okay, let me. Okay, for contingent consideration, we just remeasure to fair value. We don't say unwinding or discount. Because I checked through IFRS 18, they just say changes in the fair value in contingent consideration. So it's in operating. That's it. We don't need to consider about the unwinding or discount. Okay. And in fact, we shouldn't do that as well. We just measure the changes in the fair value, then we recognize straight away in the SOPL already. It is under investing. Sorry, under operating. Okay. Thank you for your question. But we don't do that. I mean, in the measurement of the fair value, we can do discounting, but in financial statement, we don't do the unwinding. We just straight away measure to the fair value. Okay. So correct. Gracia, you're right. So it is discounted to present value, and that is in the process to measure the fair value. So we don't do unwinding. So okay, thank you for asking. I hope this clarified. We don't do unwinding there. We actually just straight away measure to fair value. Changes goes to SOPL operating, end of story. Because the standard is very clear of this. They don't even say. They even say, the standard also says contingent consideration doesn't qualify for financing. It's actually very clear on this. Okay, so hopefully this helps. Okay, there is also some questions by some of you in here. Okay, let me see. Finance lease. Okay, finance lease, hold on. Court case liability goes to where? Okay, yeah, AJ, most likely the provision would be under IFRS 18. Most likely, because unless you tell me the court case is about your investment property, then investing. Otherwise, most of the time will be operating. So we really need to see the case. But my gut feel tells me very likely is operating. Okay, now finance lease, Jia Yi here. Okay, I want to tell you something. We need to ask this question. Finance lease, is this finance lease the principal activity? Because it is actually possible that finance lease falls under here. You know, like if that is your main activity, it can be argued as this one. You are actually providing financing to the customer. So in that case, operating. Then the interest income you earn from finance lease is under operating. But if you tell me my finance lease is actually not my main business, the interest income, we can put it under investing. We can put it under investing if it is not your main business. So see how it is, how it is. Like if your business is doing finance leasing, like if your principal activity is leasing, of course that must be operating. Okay, so we have to see the case lah. Okay, so yeah, and etc. Everyone, just so you know, operating category, this is not all. This is just I want to highlight to you. These are the things that I want you to know. It is under operating. Okay, everyone, so far so good? If so far so good, say yes. Anything else that you think you want to clarify, can clarify. Use this chance, we clarify this properly. Because I want, after this session, we all are very clear which goes to operating, financing, and investing. Okay, good. Like everyone, let me continue. I want to talk about the next category called investing category. Okay, now, investing category is actually being defined in the standard, like and financing also. They actually have very specific wording, and I will tell you the wording. Okay, anyway, the question, I appreciate if you can put in the Q&A, because like this, I don't mind, but I scare I miss out on it. Consolidated means what? Okay, Bunkang, consolidated means I do console. I console my subsidy. There is a possibility that we can prepare a financial statement which is called the individual financial statement or the separate financial statement under IAS 27. So the separate financial statement, the subsidy, we use cost. Okay, we use cost or we use equity method, or we use the fair value method, which is the IFRS 9 method. So in the individual financial statement, that one is unconsolidated. Consolidated means in console. We already do the console. So like impairment of the subsidiary or whatever, very likely will be under operating already. Okay, hope that answers your question. Okay, now investing category, everyone. Investing category is like this. If it relates to investment in associate, okay, if it relates to investment in associate, joint venture, and also unconsolidated subsidy. And this is what exactly I'm explaining just now. Unconsolidated subsidiary. Then it will be under investing category. Okay, it will be under investing category. So it's like this. I need to be clear on this issue. This is assuming if investment is not the specified main business activity. Okay, and now this statement not complete, but everyone, can you understand what I'm trying to tell you? Normally, these few things, it will be under investing if it is really an investment in nature. But if our main business is to invest in all this, it should be under operating, with the exception of these two. You understand what I mean, everyone? If you understand, you type 666. Can you understand? I'll tell you another exception, but for now, you can accept, right? If investment not specified business activity, it is under investing. Okay. However, even if, okay, I want to use a short form here, SMBA. MBA is Master in Business Administration, right? So here is SMBA, Small Master in Business Administration, SMBA. So even if SMBA is investment, you need to know there's a rule. If I invest in associate, okay, if I invest in associate or joint venture, okay, or even if it is under IAS 27, if I use the equity method of accounting, now these two I use equity method. IAS 27 I may use equity method. This one, the rule is must be investing. That's the thing. Okay, that's the thing that I want you to know. So although we say, yeah, generally this one is under investing, we have to see SMBA. But even if your SMBA is investment, the moment you use equity method, must be investing already. Okay, if you understand this, you type 888. Can you understand? The moment you use equity method, confirm must be investing. Okay, confirm, it is actually is confirmed. The standard makes it like super duper clear. Whatever thing, you just remember, if I see equity method, I don't care SMBA, confirm investing. Okay, so that's about this first thing. Now, the second thing, let's talk about the second one, which is if it relates to cash and cash equivalent. Okay, if it relates to this thing called cash and cash equivalent. Okay, cash and cash equivalent. Now, it means something like fixed deposit interest income. Okay, fixed deposit interest income, bank charges, all these things. It will be under investing category. Okay, it's quite clear. And if you watch my previous video, there is a student that asked me, teacher, foreign exchange trader, as in the foreign currency one, the trader, they have foreign currency account, they put in fixed D, they earn interest income. Which category? Investing. Confirm, I already confirm, is investing. Okay? Unless, again, everyone, this is also assume, okay, it is not SMBA. Now, I need to elaborate more a bit about this. Okay, wait, there is a question. Let me see the question first. Unconsolidated subsidy means subsidy held for sale. No. Subsidy held for sale is also considered as consolidated. Unconsolidated subsidy is under IAS 27. Under IAS 27, okay, I open my mind map for you. Under IAS 27, we have this thing. Under IAS 27, IAS 27 talks about separate financial statement. Okay, now separate financial statement means the unconsolidated one. We do not consolidate it, but we show our investment in subsidy, joint venture, or associate. We have a choice. We can choose either at cost or according to IFRS 9 or equity method. So if we have an investment in subsidy in which we use cost, okay, or we use IFRS 9, then it is called unconsolidated. That one investing. But if you tell me my subsidy, I use equity method, confirm investing already. Okay, that's the idea. The moment you use this, you confirm investing already. Okay, so that's the idea about this part. And okay, now here I want to elaborate more on the cash and cash equivalent. Now, the above is true, assuming it is not SMBA, but I need to elaborate more on what I mean. Now, the SMBA here actually means, number one, if your SMBA is to invest in financial asset, then operating. Okay, elaborate more. If my business nature is like a bank or insurance company where I invest in financial assets such as shares, loan note, debenture, in that case, if I earn fixed deposit interest income from my cash account, then operating, because this is considered part of my operation already. That's the meaning. Everyone, you understand what I mean? If you understand, you say yes. Can you understand? If your main business activity is to invest in this, or then operating. Money trader is not this one. Money trader is not this one. So that's why cannot be operating. It must be investing for money trader. If you are like bank or insurance, operating. Okay, there's a question. Let me see. Want to ask, just now you say contingent consideration, no unwinding, deferred consideration. Okay, deferred consideration, that one have unwinding. Deferred consideration unwinding is financing. Okay, contingent liability, there's no unwinding also. Contingent liability is also measured to fair value. And contingent liability very likely is operating. Very likely. Very likely lah, depending on the nature, but very likely operating. But deferred consideration, there is an unwinding. That unwinding must be financing. Okay, so this is the first SMBA. Now we need to consider the second SMBA. The second SMBA is if the SMBA is provide financing to customer. Okay, if the SMBA is providing finance to customer. Now, in short, what I'm trying to say is, if let's say this is your main operation is to provide financing to customer, then if your, okay, I use short form, this one C and CE. If your cash and cash equivalent is related to this, then operating now. Okay, operating now. Okay, example, give one example. This is actually very industry specific, but it will help you to understand better. Now, if you are a bank, I believe there will be some rules and regulation on the bank. They will say, bank, you want to provide financing to customer, you must make sure your bank have enough money on hand. Agree or not, everyone? If you agree, you say yes. Do you agree? There should be this law in place, right? If the bank no money, how to provide money to other, right? So okay, then the bank say, oh, okay, no, we keep some money in the bank. Then that money cannot touch one, you know. You are not allowed to spend the money to invest elsewhere. It must be liquid cash. Then the bank will ask, or like that, I can put in interest, fixed D or not? Can. That interest income is related to your business, that's why operating. Makes sense or not, everyone? If you think this makes sense, you type 88. Make sense? This one relates to that business, that's why operating. Okay, I don't think SBR will ask you like this, but it's just for understanding purpose. If it's related to this, operating. Now, what if C and CE is not related to this SMBA? Then how? Okay, then the entity can choose operating or investing. So like a bank, there will be some money that is not under the regulatory one. There's some extra money. So that one, is it investing or operating? Well, don't know how to trace. Okay, they say if cannot distinguish between investment, if you cannot distinguish between investing or operating, you just assume everything is operating. Okay, you can understand or not, everyone? If you understand, you say yes. Can you understand? If this is the SMBA, related one must be operating. If not related, you choose. If you don't know, everything operating, because this is your SMBA. Okay, that is for cash and cash equivalent. Now, the third one that you need to know under investing is this. Okay, hold on. Okay, the third one. This is the third one. If it relates to other asset that generate a return individually and largely independent of the entity's other resources. Other asset that generates a return individually and largely independent of the entity other resources. In short, C just means they earn passive income. Okay, passive income, investment property, like if not my SMBA, not my SMBA, I have an investment property, I earn some rental income, or I just invest in shares, I earn some dividend income, like that. So this one basically is, it refers to financial asset or investment property lah. Okay, financial asset or investment property, which is not SMBA. Take note, not SMBA. If it is SMBA, it becomes operating already. They are not the main business lah. Okay, so everyone, if you understand this, you type 999. Are you able to understand this third category of investing activity? Yeah, understood? Okay, so you see, these three category, associate, joint venture, unconsolidated subsidy, cash and cash equivalent, and also this passive income one. Now, everyone, then I want to ask you something. Okay, consider this scenario. You tell me operating or investing. Trade receivable, industry norm, credit term, 90 days. But there is one trade receivable, my credit term, I give 5 years. Whoa. Teacher, you sure? You sure? Correct. Okay, why? This is significant financing component. Question, this one cannot be financing. By the way, because you will earn interest income, so it cannot be financing. The issue is it operating or is it investing? That's the question. Right? Everyone answer. What do you think? Do you think this one suits operating more or suits investing more? Which one do you think is more suitable? Okay, everyone, I think most of you got it right. It's investing, not operating. Okay, because you see, normally 90 days, but 5 years, I think it is like this. You are earning the interest income very independent from your other sales. So very likely it fulfills this one. So should be investing. Okay, everyone, if you understand this, you're like, okay, can understand? That's the general idea. You need to know lah. Okay, so you see, judgment is required. Although just now I say, trade receivable must be operating. But this one, I don't think it's trade already, This one seems like I give the customer a loan already. Okay, so seems like an investment already. Okay, Gracia. Financing relates to I borrow money from the bank, or I issue shares to the shareholder, I receive money. This one not, correct? This one I give my customer financing. For me, is investing, I invest because I can earn interest income. Financing means I pinjam duit, I borrow money. That's called financing. Understand already? Can understand? Can okay, good. So this one we need to be clear lah. So financing is the next one that I want to tell all of you. Like what is the meaning of financing actually? Okay, so yeah. Does it mean impairment for this fire trade receivable also under investing? Correct, you are right. You are right. The ECL, the expected credit loss for these 5 years receivable, investing, not operating already. Very good. Very good. Very good. Okay. So yeah, everyone, these are the special category of investing. Not in the technical article one. I just make it even clearer for you now. So I think now we have a very good guidance already. Under what category it will go under investing is only these three. Okay, only these three will go under investing. Anything that doesn't fulfill this one cannot go under investing already. Okay, so I want to ask, interest charged by a holding company, is it financing? Okay, Hong Wei, are you what? I want to ask you first. You are the, what is that? You are holding, you earn interest, Is that what you mean, Hong Wei? You answer me in the group chat. Because this one I cannot answer if I didn't ask follow-up question. You answer me? You are holding, you earn interest, is it? Hong Wei? Hong Wei? No, you pay interest, financing. Hong Wei, you pay interest through financing. Okay? If you are the holding company, you charge the interest, your interest income, that one can be, the interest income is either operating or investing. See the SMBA. Okay, see the SMBA. So that one we need to consider further lah. But the one who pay surely financing. Okay, can I confirm? Is it all finance income will be under investing? Not necessary. Not necessary. LKY. As you know, if it is my normal receivable, I charge them interest operating. Normal one. Not the one that is abnormal like this. Okay, so then another one. If the financial asset and lease is your SMBA operating, so not when you say all, not necessary. I have to see SMBA. Finance cost, is it all under financing? Not necessary also. Like for example, let's say if my SMBA is this one. If my SMBA is provide financing, then I borrow money to give you money. Okay, let's say I am Tai Long. You know Tai Long? The loan shark. Loan shark. At least I'm loan shark. I borrow you money. Then I borrow money from the bank, so I give you money. Then in that case, I earn interest income from you. I also pay bank interest expense. In that case, both under my operating, because my SMBA is to provide financing. That's why you say all under financing, not necessary. Have to see SMBA. Okay, have to see SMBA. Okay, so yeah, may I know operating lease for manufacturing SMBA, is it both under operating? Okay, let me know. It depends. Operating lease, you see, let's say if you are a lessor, you have investment property, right? You have investment property. If you are doing manufacturing, and then suddenly you have investment property, you earn operating lease income. That one is investing because the investment property is under investing, right? But if your company SMBA is to do operating lease, then operating. Like if your company is a leasing company, then operating. So is it both under operating? It depends. It really depends. Really depends. You need to see SMBA. You need to also see, is it investing or what? Okay. All right. Okay. Like everyone, let me continue on to talk about the financing. Okay. By the way, anyway, everyone, I forgot to also tell you. If something qualifies as investing property, whatever related to this one goes to investment property. Investing. I give you an example. Interest income, dividend income. Okay, interest income, dividend income, rental income. Rental income, if it is like operating lease under investing. SMBA specified. The S is specified. The word specified. Specified. SMBA. Specified. Okay, so dividend income, rental income, what is that? Depreciation of the investing property, if it is under investment, impairment loss lah. Okay, impairment loss reversal of impairment loss is included. Fair value gain or loss. Okay, fair value gain or loss gain or loss on disposal. Okay, gain or loss on disposal. Transaction costs. For example, everyone, scenario 3 financial asset. You know, scenario 3 financial asset is fair value through P&L. Okay, if you study financial asset, there are 4 scenarios. The third scenario that I normally use is fair value through P&L, where the business model test and the cash flow test not met one. That one. So you know that the transaction cost is expense off, right? That one, if it is investing, then investing. If the investment is investing, then investing. So transaction cost is actually under here. Okay, then okay, I think enough. Okay, I think enough. Good enough already for you to know what are the things under this one. Okay, how about if there's a terms and condition of the lease payment, carbon emission target not met, penalty, is it under financing? Okay, Ming, I think this one you are referring to if you are the lessee, right? Just confirm with me, Ming. You confirm by answering yes in the group chat. Confirm? Yes, okay. Lessee, so then we need to see the lessee here. Then I need to know what is the asset that they are leasing. if you are leasing something for your operation purpose, operating. You understand what I mean? If the asset, if the lease is in relation to something you use in your operation, asset. If you lease investment property, then you lease it out. This one sublease already, this one can be quite complicated. Okay, if it is really you sublease, and then sublease and then you lease to other, if it is investing, then investing lor. But it cannot be under financing. Okay, it cannot be under financing because of it's not interest. Okay, so I hope I answered your question. Now, if sublease the property to third party, the rental income is investing, not my main business activity. If not your main business activity, then investing. Andy, you're right. If not main business activity, then investing. If it is your main activity, then operating. Okay. Wow, I didn't realize time passed that fast. Okay, never mind. Everyone, let's take a break. I didn't realize. Maybe some of you want to go to the toilet. Let's take a break. But we have a short break. We'll come back at 9:05. Okay, because I actually have quite a lot of things I want to share with you for this one. Okay, so just a short break. I'll talk to you in a short while, everyone. 9:05. Now, everyone, so before the break, I have talked about a few things. You learn about operating categories like the rubbish bin. So I listed out a few things here for you. Not comprehensive because of rubbish bin means if it doesn't fulfill investing financing, it will go under here. I still need to tell you what is financing. Okay, so it's like my purpose of going through this is to make all of you like really understand how do we determine whether something is investing or financing. And this category that you see here makes it very clear to us already. Okay, like investment in all these things would be investing, but if SMBA, then assuming if it is not SMBA, then investing. If it is SMBA, then it's operating. But equity method show is investing. Then cash and cash equivalent, we need to see like is the SMBA investing in financial asset or providing finance? Then it will be operating, if not just investing. Then this passive income asset, okay, I'll just call it as passive income asset, investing. If it is SMBA, then operating. Then we also talk about this issue, like if the trade receivable is a very long credit term, very longer than the industry norm, then very likely it will be under investing already, because if I think it should be this one, largely independent of the entity other resources. So yeah, Shu Fang, the SMBA is something that we always need to ask. We always need to ask in determining whether is it operating, investing, or financing. And you remember, for IFRS 18, the SMBA is only these two. It can only be these two types. It cannot be a third type. It has to be these two. If these two apply, then operating. Okay? If not, then financing. That's also then investing or financing. Okay. Now, I also see there are some questions here. Let me see. What is this? Sublease, is there any scenario where it would be financing? Wow. I don't think so, Hong Jing, I don't think so. Yes. There's one. Lease liability, unwinding of discount. That one. Okay, only that one. Lease liability, unwinding of discount. Do you know the lease liability you charge the finance cost? That one. Other than that, then no. Okay, only that one. I think other than that, no. Okay. If let's say foreign exchange is on machinery, SMBA is selling machine or SMBA is selling ice cream, is it correct if the SMBA is selling machine, foreign exchange is operating, otherwise under investing? Kawai, I think if the machinery is PPE, then it will be operating. I don't think machinery falls under investing. I don't think so. Okay, I don't think so. I don't think it fulfills what I say here. If it is machine, I don't think machine fulfills this one, cash and cash equivalent, and this one. I don't think machine is something that you can generate return individually or largely independent of the other resources. So I think operating I don't think it's investing Okay, Kawai. Hey, by the way, everyone, I also want to let you know what I'm teaching you here is the SOPL, not SOCF. Statement of cash flow one different, Statement of cash flow, they define investing differently. In statement of cash flow, investing, okay, since that question reminds me of statement of cash flow, I think maybe I should talk about this. You see, in statement of cash flow, the investing activity is actually on NCA, you know. It's actually on NCA. Example, purchase or sales of PPE. PPE, you see, just now I told you something related to PPE is operating, but it's for SOPL. Cash flow, no. Cash flow, purchase and sales of PPE is investing. Investment property is here. Intangible asset, financial asset, whatever. So all this is under investing. So take note, there is a difference. It's not the same. Okay, don't ask me why not the same. Okay, this is a question that the IASB has discussed in detail and they decide to make it different. Okay, so we don't ask why. If you want to answer why, you need to study the history of how accounting standard developed. That one won't come in exam. Okay, I hope this is clear to you, everyone. Is it clear? If clear, you say clear. Is it clear to you? Can you see the difference? I hope you can see the difference. Clear? Clear? Okay, good. Now, everyone, I want to talk about financing category. Okay, let's talk about financing category. The financing category. Okay, the rules on financing category is a bit weird. And it's also, how to say, the IASB actually try to make things less complicated for the user of the financial statement, for the investor. But in doing so, it makes accountants suffer. Okay, in doing so, it makes accountants suffer. Now, what do I mean? Okay, for financing category, there are actually two scenarios in which we can use this case. Okay, like everyone, I tell you. First, is if it relates to liability, that arises from transaction that involve only raising of finance. Okay, if it arises from liability that arises from transactions that involve only raising of finance. Okay, in other words, this is a pure loan. Now, how does a pure, I mean, in what is it? In exam, we don't say pure loan, but what I want to try to tell you is actually, my webcam really keep on switching. I hope I hope it's okay. But at least my voice is still clear. Okay, and you can still see my screen. My webcam just let it be. To fix it a bit problematic. Now, you don't write pure loan in exam. But when I say pure loan, it means something like we receive money. Okay, we receive money. Something like we receive money. And then later, we will pay back. That's the meaning. That's the meaning. If the liability is like a loan, where you receive money. Okay, or maybe you do not receive money, but someone help you to pay off your loan. That is also the same, but I just make it simple. We just say receive money. Subsequently, you pay back in cash or you pay back in your own shares or whatever. It doesn't matter. But as you know, this is just financing category. So in this case, example will be like bank loan. Okay, bank loan, debenture, bond, something like that, where you really receive money and you will pay back that is the idea. So if all this, then it will be under financing category. So to make it clear, what is it? Initial, subsequent measurement, okay, from initial or subsequent measurement. Now, talking about subsequent measurement, I have to mention about a topic to you, a modification of a loan. Okay, modification of loan. This one is covered in my previous revision video. full course student, you have this as well. Modification of the loan, you learn about if the modification is substantial. If the modification is substantial, then the cost is expense off to the SOPL. That one under financing category. Okay, that will be under financing category. You can read up more on your own, but I'll just make it clear it's under financing category. What else? Derecognition. Okay, all these will be under financing category. Okay, transaction cost, if you expense it off to the SOPL on this kind of liability. Interest expense, like if you pay the bank loan, interest expense. Fair value gain or loss, if you go for the fair value option. Dividend on redeemable preference share. Dividend on redeemable preference share, as you know, redeemable preference shares is liability because we have the obligation to pay back the money. So the dividend we pay is actually interest. So that will be under financing category. Okay, so the above is also assuming SMBA is not provide customer with financing lah. Okay, of course, this is a very important assumption, because if our SMBA is to provide customer with financing, this will be operating already. Okay, so that's the idea lah, everyone, that's the idea. So if SMBA is, if the SMBA is this one, okay, if this is the SMBA, then if related to this, if related to SMBA, operating. If not related, then you can choose whether you want operating or financing. Everyone, you will see this one is similar to cash and cash equivalent. Actually, it's similar. Related to this, then the interest income operating. If not, then choose. Cannot distinguish, assume operating. Same thing. Okay, same thing here. Okay, if cannot distinguish, operating. Okay, if you cannot distinguish whether is it related or not, operating. That is for this first liability. Everyone, are you okay or not? Or you have any question? Are you okay? I think the first one is still easy to understand if it is relating to loan. Okay, guys? Anything want to ask? Okay, no problem. Can answer now? Okay. Lermin, fair value gain or loss, refer to financial liability. Betul, you're right. Correct. Correct. That one, if the liability is fair value through P&L, then is financing. Okay, now everyone, let's talk about the second one, which is the confusing one. Okay, the confusing one. This one very special. Okay, this one is related to liabilities that is not under A above. Okay, meaning to say, if it is not this liability but other liability, there is a possibility that this can be under financing as well. Okay, so the general idea is this. Generally, cannot be financing. Okay, I give you an example. Okay, example. Trade payable. Okay, trade payable. Now, trade payable is a liability, but it's trade, right? Oh, so it's under operating, Okay. Contract liability. or deferred income. You don't go and tell me, oh teacher, I received the advance payments, or I credit to deferred income. Then I move it to revenue under financing. How can it be? It must be revenue, must be operating. Then lease liability. Okay, is also under this category. Then what else? The PVDBO under pension. That's why current service cost, past service cost is under operating. It's not under financing. Decommissioning provision. Provision for decommissioning expenses. So it's not under this. Provision for for court case or whatever. It's not under this. Cannot be under financing. Litigation provision. So okay, all these things cannot be under financing. Okay, everyone. I hope things are that simple, but no. Okay, I need to add another however. However, if there are unwinding of discount required by the standard, this is the keyword, required by the standard, then the interest expense financing. Everyone, I don't know you understand by this or not. Example, lease liability. The standard says we need to charge interest, right? We need to do unwind the discount. So the interest is under financing. Then this PVDBO, present value of the defined benefit obligation, standard say need to do unwinding or discount. That one financing. They want financing. But then current service cost, past service cost is operating. So this is where things get a bit strange. The standard intention is actually, if it is unwinding of discount and it is required by the standard, must be financing. Everyone, you understand what I mean? If you understand, you say yes. Can you understand? That is a standard intention. Unwinding of discount required by the standard, it must be financing. That's what they say. So even though you see this liability, it's not loan. It's not loan at all. It's not like we receive money and then subsequently pay back. It's not like that. But it is the interest, unwinding discount, to make things consistent, to make the investor understand, they put this as financing. Because if you put unwinding of discount under operating, IASB thinks it's going to confuse even more people. So that's why to prevent the user, because you see SBI, you need to know the user of the financial statement, right? So the user not confused, because all these while user already know unwinding discount is financing, so finance cost. So that's why we don't want to confuse them. That's why they decide unwinding discount we put under financing. Okay, so example, everyone, example is like what I said, this one unwinding discount, this one unwinding discount, unwinding a discount. Okay. Everyone, I also want to make it clear to you. For pension, you can have either net pension liability, then we will have finance costs. Terry, actually confused is for us. For the user, I think better. Okay, for the user, I think better. Because they need, the IASB need to consider, all this while the user used to know unwinding a discount under finance costs. Then suddenly you put under operating, then I confused already. So that's why they have to do this. Okay, they have to do this. Okay, net pension liability under finance costs. Okay, then pension, you also have the possibility of net pension asset. If it is net pension liability, is the liability larger than the asset. If it is net pension asset, is the liability lower. Okay, so this one you have finance income. The standard says it like this. These two, we all put under financing. Okay, we put under financing. Yeah, increase understanding for user. Complexity for accountant increase also. Hey, by the way, you guys get confused. You know, in real life, accountant, when they look at this, they also confused. You're not alone. You're not alone. You try to talk to big four accountant, you see they're confused or not. You try to talk to auditor, you see they're confused or not. Everyone confused. That's why there's a reason why I want to go through this with you. Because of I realize if I don't, we all will be even more confused. At least now you listen, you at least can refer back to what I say. So at least I want this to be unrecorded. Subsequent student, when they come, I'll say, this video you watch, make sure you watch. It will help you to understand better how to classify. That's my purpose. Okay, anyway, guys, I hope this is clear. For pension, the standard actually makes it clear. Whether or not is it expense or income, it can be under financing. Okay? Don't worry, examiner will not ask you the confusing one. Examiner will only ask you the not confusing one. Okay? So like what I tell you here is the one that we already can understand already. There's no argument one. That's the reason why I talk about this. So you don't worry. If you can understand all the example I give you here, you're okay already. Confirm you're okay with this category. You don't worry. Because I teach this more than the technical article already. Okay, so you don't worry. You don't worry. In real life, even more confusing. Okay, now everyone, I want to ask you, let's think of this. If my SMBA is to provide financing to customer, then all this unwinding of discount would it be still under financing or would it go to operating? Example, before you answer further, okay? Before you answer further. Let's say I am a bank. I provide financing to my customer. Then I have a lease liability. Then my lease liability, I have unwinding of discount. So what do you think? Do you think it will be under financing or operating? Like you tell me, would it be under financing or operating? Operating. So you see, now we have a mix. Some say financing, some say operating. Okay, now everyone, you need to know this. If it is under this category, if it is unwinding of discount required by the standard, then it must be financing. It cannot be operating. Okay, it cannot be operating. If it is this kind of unwinding of discount for this few category, unwinding discount required by the standard, it must be financing. It cannot be operating. Okay, so in short, you can see here, the standard is really committed to make sure unwinding of discount of this one. Now, by the way, we are not talking about this bank loan. This bank loan where you give SMBA to the customer, this one operating, I agree. I'm not talking about this issue. I am not talking about we receive loan and then we pay back the loan. No, I'm not talking about that loan. I'm talking about these other types of liability. That is not a loan. That is not financing activity. But for some reason, this one has unwinding of discount. Still under financing. Okay, it cannot be under operating. Okay, everyone, I hope I make it clear. Are you clear now? In short, you just remember, unwinding of discount, confirm financing. Yeah, everyone, if clear, say clear. Are you clear? Unwinding of discount, not related to the loan one, confirm financing. That's what the standard says. They make it very clear. Okay, and this is where the article didn't say it, make it clear. So I think make it very clear for you. Okay, then everyone, if clear, I give you one example. If this one you can understand, then you will be good already. Okay, now, let's say, I have a trade payable, but it is long term. Okay, trade payable, which is long term. Now, long term as in, let's just say 5 years. Okay, let's say 5 years. Wow, 5 years of trade payable. Yes, let's say 5 year trade payable. Okay, then the supplier charge interest. Okay, the supplier charge interest to us lah. Charge interest, so we need to pay. Okay, supplier charge interest, so we need to pay interest. Okay, so no issue. Now, in this case, the interest is actually stated in the contract. Okay, so now question. This one, financing or operating? You tell me, financing or operating? Okay, yeah, correct. This is financing. No problem. I think we all can agree, financing. Okay, why? We apply amortized cost lah. In this case, amortized cost for financial liability. Okay, we apply amortized cost for financial liability. Okay, this one 5 years, then the interest way we use amortized cost method. So it is an unwinding discount required by the standard. Okay, so that's the idea. Okay, however, everyone, I give you another example. Trade payable, contract did not mention interest rate. Okay, contract didn't mention interest rate. Then the contract says late payment, you need to pay penalty. Okay, let's say 1%. Okay, let's just say lah. So the only penalty they mentioned is late payment. Customer, they didn't mention interest rate. And to make it clear to you, credit term is 60 days. So everyone, I want to ask you something. If credit term 60 days, do you do discounting in the first place? Right? Can you answer this question? Do you do discounting in the first place? Okay, so we all know that this one, there's no discounting. So can we all agree? No discounting means there will be no unwinding of discount. Agree or not, everyone? If you agree, you say agree. Do you agree? If there's no discounting, there is no unwinding of discount. Agree, Okay, so if no unwinding discount, then they cannot be financing activity. Okay, they cannot be financing category activity. Okay, yeah, my screen, I really don't know. Okay, so you see, what I'm trying to tell you is this penalty, if we pay, it will be under operating. Okay, even though 1% seems like interest, but then you need to know, this interest is not really required by the standard. We don't do discounting. We don't do unwinding of discount, so it cannot be under financing. This kind of late payment penalty, operating. Oh. Everyone understand or not? If I understand, say yes. Okay, understand? I hope this makes sense to you. We need to actually see, is it something required by the standard first? If standard says you need to do discounting, you do unwinding, then financing. If the standard never say you need to do unwinding, you cannot put it under financing. Because first of all, trade payable is not a pure loan where we receive money and pay back. It's not under A. Trade payable is under B. So B, we apply this rule. Okay, I hope now it makes it clearer to you already. So if SMBA is leasing, unwinding discount, also financing, Lermin, if leasing, I will think that leasing, it will be you provide financing to, sorry, Lermin, leasing, SMBA leasing, then you are the lessor. Then your finance income is either investing or operating. It cannot be financing. You need to be clear, because if you say SMBA is leasing, then we are talking about interest income. So it's the question of is it under investing or operating? So I would think that if leasing, it means their principal activity is to provide finance to customer, it can be under operating rather than financing. That one different. That one is not, first of all, that one is a lease receivable. Lease receivable is not a liability, so you cannot apply this one. Okay, hope I answered your question. We need to be very clear. Okay, good. Thank you. Okay. Now, everyone, actually, that's the important thing I want to tell you for these three categories. Okay, these are the important thing I want to tell you for this category. So it's like, now you have a very clear understanding already. What is under financing, what is under investing, and what is under operating. But I want to tell you a bit more. There are still a few more scenarios that I want to tell you because it may come out in exam and I want you to be prepared. Okay, consider this scenario. Like everyone, consider this scenario. If I have an impairment of a CGU and the CGU is a subsidiary. Now, as you know, my subsidiary can have many assets, right? Can have many assets. You know, like it could be my subsidiary has PPE. My subsidiary has investment property, and the investment property not SMBA, so they will be investing activity lah. And then maybe my subsidiary also, okay, yeah, let's just say like this. Let's just say I have PPE, the subsidiary has PPE, the subsidiary has investment property. Okay, there is PPE, there is also investment property. So this investment property, make it clear, not SMBA. So now, if I do impairment of this subsidiary, so if I do impairment of this subsidiary, so you know how we do impairment of a subsidiary, right? Okay, you know how we do impairment of subsidiary. We will first measure the CA and the recoverable amount. If there's any difference, then it's impairment. So can anyone of you tell me, the first impairment should go to where? In a CGU, the impairment hierarchy, the first impairment we need to charge to, yes, specifically impaired asset if don't have goodwill. Okay, so specifically impaired asset if not goodwill. Now goodwill, whatever, impairment of goodwill will be under which category? Can you tell me? Impairment of goodwill will be under which category? Operating, investing, or financing? Okay, operating, good. Then afterward, everyone, when we are allocating the impairment to other asset on pro rata basis, then maybe we will say, okay, we may want to allocate the impairment to PPE. Impairment to PPE goes to operating. Now, investment property, do we do impairment or not? Possible if the investment property is using cost model. If the investment property using fair value model, we don't do impairment because the fair value adjustment already cater. But if let's say it is cost model investment property, you have impairment of this, it goes to which category? Operating or investing? Right? Everyone tell me. If it is investment property, not SMBA, then investing. So you see, in an impairment of CGU, the impairment, we need to split between operating, investing, or financing although financing is highly unlikely, okay, because as you know, financing is liability. I don't think you have it, but it could go under investing. You need to split. Okay, but this one you understand or not? If you understand, you type yes. Can you understand? In the impairment of CGU, there's a need for you to do that. Okay, I think this one can understand. Now, let's make it a bit more complicated. What if this one? What if this? IFRS 5, disposal group held for sale. Let's say the disposal group is a subsidy. Then what happened? Okay, then you know what happened, right? In the SOFP, you will have the NCA and the CA. Then all the NCA will come to CA, right? Then there will be something here. We call it as the disposal group held for sale. Like that. That's what we do. So you see, everyone, if this one, you want to split between the category, is actually very difficult, Now, because you need to know, for NCA held for sale, the first thing is you do the normal impairment, that is okay. But upon classification to held for sale, you need to measure it at the lower of CA and fair value less cost to sell, right? And then the difference goes to SOPL. The question is where? The question is where? Operating, investing, or financing. Then some people start to think already. Oh, okay, let me, what if no discontinued operation? You know, it is possible that this disposable held for sale is not discontinued one, you know. If discontinued, I agree it goes to discontinued. That one, no problem. What if it is not discontinued? What if it doesn't fulfill the discontinued operation? So now, question comes already. Wow, my disposal group has so many assets. Some asset is investing, some asset PPE. You mean every time this I need to split? Huh? So everyone, what do you think? Do you think we need to split or not? That's my question. Yes or no? Right? Have a guess. Do you think need to split or not? Okay, everyone, you are right. No need. Why? Too complicated. IASV say, this one if split, I think everyone will cry. We don't want too many people cry. We already know this one, they will cry. They will cry because of this already. This one cannot make them cry. So this one, very basically operating. Unless, there's an unless. There's an unless. There's an unless. Okay. Unless. Okay, wait a minute. Everyone, by the way, I want, because I don't want you to be confused. What Indian drama? I don't want you to be confused. In the process to classify as held for sale, the first step is you need to apply the relevant IFRS. This one you do normal. This one you still go for operating, investing, financing. Okay, this one you do normal. Apply the relevant IFRS, you do normal. I'm talking about the process of measuring it to fair value less cost of sale. This one. Okay, I'm talking about this one. Then this one, operating is correct. So what I want to tell is, okay, so held for sale or whatever. So they say, unless if you have this issue, all the asset except for deferred tax asset, okay, all the asset except for deferred tax asset is investing category. Then this one must be investing. Okay, in other words, if this disposal group is a sub-C, which is 100% asset is property, investment property, then that one you classify as investing makes sense. But the moment, if your company has a PPE, everything goes to operating already. So this is a very small exception. Because if you have this kind of company, you say this is operating a bit strange. So that's why they say, if really all your asset is under investing category 1, then you go for investing. That one makes sense. But they say, so it's very minor case only. Very minor case only. But otherwise, it will be under operating. Everyone, you understand what I mean? If you understand, you say yes. Can you understand? This is the very minor situation only. Minor situation, then it will be under investing. Very minor. If the sub-C has PPE, okay, straight away operating already. That's the idea. Now, if this one is okay, then I will tell you, okay, Kang Yao, if it fulfills discontinued operation, it will definitely go to the discontinued operation. If the disposal group held for sale relates to discontinued operation, it must go under here. That one is for sure. The example I'm talking about here is assuming if it is not discontinued. Okay, you understand what I mean? Assuming you have disposal group held for sale but not discontinued operation one, then you apply this rule. If it is discontinued, no issue. We straight away put under discontinued operation. That one is okay. Okay, so I think I make it clear. If not discontinued, then you apply this rule. If not discontinued. Okay, like everyone, the next thing I want to tell you, maybe you have forgotten about this. Okay, but it is about this thing called in IAS 40 transfer. Transfer. Still remember? For example, previously I am using IAS 16, I am PPE. Then afterward I decided I don't want to use anymore. I want to change to IAS 40 investment property. Something like that. Okay, so now if it is like this, how we because of, you see, let's say if the investment property we use fair value model, then our accounting step is like this. First, we are going to, depreciate the PPE to the date of change of use. Okay, to the date of change of use. Now, everyone, can you tell me this one goes to where? Operating, investing, or financing. Depreciation of PPE. I think you all know, right? Yes, operating. Then afterward, because of the use fair value model, you have to revalue the PPE to fair value. So the gain on the revaluation here goes to where? Anyone? Guys, OCI lah. OCI lah. Right, revaluation model Mana investing apa ini? Revaluation model IAS 16 IAS 16 No, not PP, not investing, PPE, you apply the revaluation model OCI lah. Understand or not, everyone? If you understand, you say yes. You understand or not? This one don't get tricked. You don't. I keep on talking about operating investment. You forgot OCI. OCI still go to OCI. Please okay. You don't suddenly go and say okay. Pension remeasurement goes to operating. Then I'll pengsan, pension remeasurement is OCI What operating? So you don't think you don't keep on thinking operating investing financing You please remember OCI is still a thing You see, that's why this class is very important, I actually give you a lot of scenario to think so that you become expert Okay, then afterward you will continue with the investment property, which is IAS 40. Then here the fair value gain or loss goes away. Everyone tell me. Investment property, assuming not SMBA. Assuming not SMBA, investing. Okay, assuming not SMBA, investing. Okay, so in short, actually the transfer is still the same. We still follow the original category. Before the transfer, the depreciation or the impairment, goes to operating. Then if there is a gain, OCI. Follow the existing standard. So it's still the same. Then what if investment property becomes PPE? It's the same. We need to remeasure the fair value investing first. Then only you go start PPE. So I think this one you can understand. Just follow the original accounting standard. Okay, now everyone, if this is okay already, then let's talk about this foreign exchange. Okay, foreign exchange. The complicated one I don't teach you. I don't think will come up. I just want you to know, for foreign exchange, you just know what the examiner tell you. Just this will do. Okay, the complicated part, I will assume it won't come out. Okay, because if that comes out, a lot of students sure don't know one. So, and if examiner don't mention, I believe it doesn't come out. It won't come out, so you know already. You just have to know, for foreign exchange, follow the nature of the item. If receivable, foreign exchange gain or loss, operating. If you have a loan from overseas bank, foreign exchange, financing. If you have foreign exchange on financial asset, which is not SMBA, investing one, investing. Can understand or not, everyone? If you understand, say yes. Can understand? That's all you need to know. For exam purpose, that's all you need to know. Okay? No need to know the complicated one. Okay, good. Finally, the last thing that I want you to know is in terms of this thing called derivative. Okay, derivative. This one, the examiner actually just tells you, you only need to know this because in the actual standard, the derivative, the rules are also quite complicated. So the idea is like this. What you need to know is, if you use derivative in hedging, you follow the income and expenses affected by the risk that you used to manage. For example, everyone, if you are hedging inventory, then the derivative gain or loss operating. Of course, you don't forget, cash flow hedge can go to OCI first, then afterward only go back to SOPL. So the one that touches the SOPL, follow it. If you hedge inventory, if you hedge sales or purchases, operating. If you hedge investment property, investing. That's the idea. Now, even if it is not hedging, like even if you don't apply hedge accounting, but if the purpose is to manage risk, you use the same rules as well. Follow the transaction that you want to hedge. So then here they say, if you enter futures contract to buy inventory, operating. Whether or not you apply hedge accounting rules. Now, if it is not to manage risk, then operating. For example, if a company invests in derivative just because of they think they can earn money. Okay, let me repeat. If a company invests in a derivative because they think, oh, I think the gold price will increase now, so I want to buy gold, but I don't want to buy actual gold. I buy the futures on gold. Then I will earn some money. Then you have the fair value gain on that. Now that one, not for hedging purpose, just purely speculative operating. It cannot be under investing. Everyone, you understand what I mean? If you understand, you type 111. Can you understand? Although it sounds like investment, but it's not investing. You have to remember it is under operating. Okay, I think there's someone asking a question. Yeah, so the question will tell you, Evan, even if they say they buy derivative for investment purpose, also not accepted. It cannot be under investing. Okay, it cannot be under investing. The reason is because you see, why cannot be under investing? Is it investment in an associate joint venture unconsolidated subsidy? No. Is it cash account? No. Is it a passive income? If you invest in derivative, is it a passive independent income? No. The risk quite high, in derivative, so it doesn't fulfill this one. Hence, if you just buy derivative for speculative purpose, cannot be under investing. That's the reason. So that's why here they say it's under operating category. All right. So what if the company hedge currency? If it is for hedging purpose, hedging. Let's say if it is, Terry, I need to ask you more. The hedging here is what kind of hedge? Is it a hedge for future transaction? Is it for future receipt of money or future payment of money? Can you answer me? Yes or no? Right, Terry? Future, okay. Then it is a cash flow hedge. We need to ask this question. What are you hedging actually? Can you give me an example? What are you hedging? What kind of future cash flow you are hedging? You give me an example, then I can answer you more. Is it that you are going to receive money? If so, you receive money from who? Or is it that you are going to pay money? If so, loan. Loan. So pay money or what? Can you be more specific? You pay money or you pay money. So you will pay a loan, right? Is that what you mean? You'll pay a loan. You pay a loan. You are hedging. You want to hedge because you have a payment in the future. You will pay in foreign currency. Okay, USD loan. Okay, just to ask you again, are you paying the principal or the interest? Or both? Need to be clear first. Which one? Principal, interest, or both? Both. Okay. Financing then. Can you understand? This will be under financing because it relates to the financing activity. Okay, so it is a cash flow hedge. So the initial gain or loss on the derivative goes to OCI first. Then afterward, when you pay, you only bring out you bring out the portion related to interest, you offset in the financing category. But then the one that you actually pay off the loan, that one is not through P&L. That one is actually outside P&L because that one is paying the loan. But if any gain or loss on the payment goes to financing. Okay, because it relates to your financing category. Okay, I hope I answered your question. That's how we look at this. Okay, very good. So yeah, I think that's all. Okay, yeah, everyone, there's actually one more thing I just want you to know. Just in case only, but I don't think you will get this, but just in case. Just in case. Just in case if you have a derivative where the main purpose is only on raising of finance. Meaning to say, not for hedging purpose. Okay? Not for hedging purpose, but they want to raise finance. For example, relating to issue of shares in foreign currency. Okay? They want to issue shares in foreign currency. And then they buy a derivative. This one, it must be financing. Okay? This one, it must be financing, just so you know. It is just a very small exception that I want you to know. If the main purpose is only raising of financing. Otherwise, operating. Okay, if not for hedging, operating. Okay, that's it. Everyone, if you're okay, you type 222. Basically, that's all I want to tell you about operating, investing, financing. Done already. Okay, I think all the possible scenario they can come out, we already cover. Okay, the rest is you just have to make a judgment already. Okay, if you have any question you ask, so it means that because I see now it's already 10, I will not start the console question. Better we stop here, but I actually want to tell you a bit more things. I just see, if anyone has any question, you please ask. Tomorrow, then only I look at the mock exam. Okay, how can we raise fund through derivative? Shu Fang, no need to worry. Okay, you no need to worry. This one, I don't think the exam will ask. Okay, but I give it some idea. The idea is because if they issue shares in foreign currency, they worry they may receive more or receive less. So they want to make sure they receive a fixed amount of foreign currency. So they may buy derivative for this purpose. And since this purpose is on raising of finance, is financing. That's all you need to know. Okay, no need to know in too detail. Because in any case, this issue not in technical article. Yeah, it's like hedging. It's like hedging, but not exactly. Okay, not exactly. It is not really like cash flow hedge, because cash flow hedge is like a future transaction, and this one is raising finance, is related to equity. So that's why they need to make it clear. Even though it is relating to equity like this, it can be financing. They just want to make sure, because financing, if you look at the definition here, is liability, they don't put equity. So that's why they just want to make it clear. This kind is actually under financing if it is only for this purpose. Okay, so finance income from financial asset for unwinding discount. Okay, LKY, not necessary. Financial asset, as you can see, it is not a liability. So you do not apply this financing. Okay, LKY, I hope you'll get it. Financial asset is not under this liability, so you don't apply the financing rule. So that will be under investing. Very likely is under this one, if it is the largely independent of your other resources, if SMBA operating. Okay, like any other question? May I know why I cover IFRS in so detail? Because IFRS 18 can come out in any question. Boon Kang, you need to know, it can come out in any question. What I cover is actually all the topics in SBR, all the topic that you are expected to know in SBR. It's just that because all this while, in my full course or in our previous revision video, we never talk about operating, investing, or financing category. So, sometimes at times our student will say, hey teacher, this standard, do we use operating, investing, financing? Then this kind of question actually a lot. So I think we need to have a more detailed guidance on this. Because every question in SBR, as long as it affects SOPL, you must mention which category. So it's very pervasive in the exam. That's why I must tell you in detail. Okay, Boon Kang? There's a reason one. It's not that I teach for fun. It's not for fun, and I teach a bit more than the technical article, because I think technical article is too brief already. Really, because of the more I study, the more I realize I need to let all of you know. At least this is more comprehensive. You study this better than nothing, Okay, so let's see in the exam. We really don't know which category. Casey, can you change your question to you will learn to know? Because I don't want to answer the question of if you really don't know. Okay, right the wrong or don't write it better. I will tell you to write. Just write. Have a guess. Have a guess. Please have a guess. And most of the time, operating has higher chance of kena. Most of the time, operating has a higher chance of the right answer. The reason is because if you look at it, these are, I mean, if you study in detail about this, if you think, not operating and not investing, not these three, not the financing these two, it's not OCI, it's not tax, it's not discontinued, must be operating law. Okay, so you can guess. I think we can guess operating is a dustbin, correct? Tong sampah, exactly. Exactly. Okay, everyone. Now, I want to just tell all of you a little bit more thing. I mean, just to clarify, this is not exactly relating to financing or what. It's more on this area because of now it's already 10. I actually want to end the class quite soon, but just tell you a bit more because of in the next 5 classes, I will not come back to this already. I want all of you to know or to pay attention. You see this article. This article actually tells you what the examiner is thinking. Okay, so we talked about the operating, investing, and financing in detail already. And then you need to know the compulsory subtotal. It is good that the mock exam by ACCA finally give us a console SOPL and OCI. Finally, I've been waiting for this question for so long already, Finally, we have a sample that we can look at that involve a new format. So it is good. It's good. I've been waiting for this for so long already. Finally come out. Okay, so it's good. Then you need to also know about this, everyone, the theory, aggregation and disaggregation. We'll come out this one. Theory, this September came out SOPL, SOIP. Okay, I think cash flow also got some students got it. So no guarantee this semester high chance, no guarantee. Okay, no guarantee. September actually came out SOPL, I remember. Better don't come out, KC. The moment you wish for this, you'll get it. Experience. Experience. I kena when I study P2. Just so you know, my what is that? My friend says better than SOCF. I said I must study SOCF. Really came out. Really came out, and I said, so lucky. So lucky. SOCF, don't skip, everyone. Really, don't skip. Don't skip. At the very least, you go through the question, that one question, the specimen exam 2, that question. At least one question. Just one will do. Just one. Rather than totally clueless. Okay. Yeah, Loi Fu. Government grant from government. Okay, this one. First of all, we need to see the grant is for what purpose. Can you tell me or not? Loi Fu, since you asked like this, can you tell me the grant is for what purpose? Grant related to income or grant related to asset? I need to know. Like, you tell me. You give me an example, then only I can answer you. Okay, grant related income. What income? What is the purpose of the government giving me this grant? Can you give me? The purpose of the government to give me this grant is for what purpose? Want me to do something. What is that? Yeah, what's that? The purpose of the grant is what? Because if no, I cannot answer. Really, if no, I cannot answer. You need to tell me what is the purpose of this grant. Government give me grant cannot be for fun run. Really for fun operating. Okay, now if buy asset is a government grant related to asset, then I will need to ask, what asset is that? Navina. Okay, Navina, what asset is that? Can you tell me? If you are telling me about asset, what is that asset? Is it PPE? Is it investment property or what? Very important, These are the questions we need to know. Can you tell me? Is it PPE? Is it investment property? PPE operating, guarantee is operating. Okay, guarantee operating. Investment property investing. If not SMPA. You see, government grant related to income. Let's say if the government grant is for you to clean up the environment, operating lah. Okay, operating. If the government grant is in the form of, let's say, a grant for you to I don't know. Have to see, really have to see. But most of the time, what I think it will be operating unless you can say it is related to financing or investing. Okay, so okay, government loan below market rate interest, that one, okay, YC, that one financing, because of it is related to government borrowing. You borrow money from the government, you pay back. So that one under financing. That one confirm financing. Yeah. So yeah, that one financing. So other than that, I don't know. You need to tell me the purpose of the grant. So okay, I hope I answered your question. Okay, I will answer your question. Okay. Specimen 2, correct. Thank you, Casey. I remember it's specimen 2. You go to the September 2025 revision, you look at it. I did talk about that. So you make sure you learn that. Just learn it. Okay, government grant related to rental paid. Xin rental paid. First of all, I want to ask you how do you treat the rental in your account? Is it under leasing, ROU asset and lease liability, or what? Leasing. Okay, likely operating. Okay, very likely is operating. If the rental you paid is related to an asset that is for operation purpose, operating. Okay, I mean if it is related to asset that is used in operating. Like for example, if the government give you rental for staff quarter, which means the staff accommodation, that one must be operating. Oh yeah, everyone, I think I should I want to revise with you on this since you mentioned this. Okay, since you mentioned this. Everyone, what is the class? Okay, there's a question on SOCF. December. Casey, I'll tell you, don't skip cash flow. I don't know. I don't have feeling this time round. This time round, I have no feeling. Really no feeling. So, but I will tell you, don't skip. Don't skip. Cash flow really don't skip. Okay. Cash flow have to apply IFRS 18 new format, correct? This one I talk about it in September revision. So Tiffany, you go and watch the September revision. I talk about it in detail. Like it will start with operating profit. Then the interest paid is no longer under operating activity. Interest paid will be under the financing activity. That one already mentioned. Okay, so okay, I have to learn. That if I have time, I will cover. But my focus after today will be on the mock exam. At least I must finish the mock exam first. And then if I have time, I can cover. Okay, because if mock exam not cover finish, that one more serious. Okay, mock exam very important. Okay, so don't skip, don't skip. Now, everyone, I want to ask you this question. If I collect rental from my staff for staff accommodation, is that property investment property or PPE? Everyone, answer this question. What do you think? If I collect rental from my staff, okay, from my staff, is it PPE or is it investment property? Okay, majority of you are right. PPE. PPE. The reason is because staff is part of your operation. So that is not really investing. So investing, the rental must be from third party, as in not your staff. Then only we say it's investing. If it is for your staff, we consider that as PPE. So that one we do depreciation. We don't do fair value model. So the depreciation on that is under operating category. So like if you tell me the government grant is on staff quarter, it must be operating. That's what I want to tell all of you. Okay, so now everyone, this aggregation you read through, very simple. It's just something on similar item you can aggregate. Not similar one, you must disaggregate. And then you also have to know about the labeling. Try not to use other. You need to be more specific, like other investing income. Finally, MPM. This is something that a lot of you get confused. So here I'll just quickly tell you. Everyone, listen carefully. Once I'm done with this, then we can have end our class. The cash flow is here. You can read through if you want. Okay. But what I want to talk about is just briefly on MPM. Okay. Now you see. First thing first, everyone. MPM is not something that the IFRS 18 says, management, you must put in MPM. That's not what the IFRS 18 is doing. Are we clear on this, ladies and gentlemen? If you are clear, you say clear. Are we clear on this? IFRS 18 never say, management do MPM. No, it's never like that. Huh? Now, IFRS 18 is like this. They ask this question, this company has MPM or not? Yes or no? Everyone, which type of company normally apply IFRS? Listed company. Non-listed can apply also, but most of it is actually listed entity. So now, will listed entity publish MPM in their, outside the financial statement, such as in the newspaper, article, in their website, in their annual report? The answer is yes, very likely they will. So most of the time for listed company, the question to is the entity using MPM is yes. But let's just say, if a company, they do not publish MPM, this section they can ignore. Okay, if you understand this, you type 111. Can you understand? Understand? Huh? If the company you have MPM, we look at this. If don't have, no need. So now we assume, I'm a listed company. I publish MPM not in financial statement, everyone. Let's be clear, not in financial statement. I publish MPM somewhere else. Where is that somewhere else? Maybe I publish the MPM on my website. I want to tell people, look, I have these earnings before interest and tax, EBITDA of how much, Oh, I'm very proud of that. That is MPM. So they publish it somewhere outside the financial statement, not in SOPL. Not in SOPL, somewhere outside the financial statement. Okay. So now, first thing first, you need to know what is MPM. Now, what is MPM? This is the definition. Make sure you remember this definition. MPM is a subtotal of income and expense. Okay, wait, I screenshot this because I want to annotate this one. Okay, see this, everyone. See this, MPM is a subtotal of income and expense. Meaning to say, it must be income minus expense. And you get a total. This total is called MPM. So it must be profit. It must be profit related figure. But the profit is not the profit in the financial statement. Okay, it is any other profit. Now, what kind of profit? The company can call it anything they want. Up to the company to decide. So everyone, you understand what I mean? If you understand, you say yes. Can you understand? This is the first point of MPM. It must be a profit measure. Income minus expense. Okay, then I want to ask you. Let's say if the management, they publish, okay, my company total investment income is 1 million. Is that MPM? Yes or no? Yes, my company total investment income is 1 million. Is that total investment income MPM? No, that one is an income measure. They don't minus expense. So that one cannot be MPM. MPM must be income minus expense. Okay, so that's first one. Now, second one. This MPM, the entity used in public communication outside financial statement. So the second one, it must be used outside financial statement, not in the financial statement. Financial statement is SOPL, SOP, SOCAE, SOCF, notes. Not in this here. They use it elsewhere. Press release website annual report investor communication whatever, but not in the financial statement. Okay, then the third one, what is the purpose of this total? The purpose of this total is to communicate the management view of an aspect of the financial performance of the entity as a whole. So they want to tell the investor, look, we have this special profit that we calculate just for you. This profit will allow you to understand our performance as a whole. That's the main purpose. And fourth, it is not something required by the IFRS. That is the fourth point. So make sure you remember these 4 points. So the questions in SBR can ask you, is it MPM? So in the September revision, I have question on this. You watch that, you will understand more. But everyone, so far, are you with me? If you are with me, you type 333. Are you with me? Can understand what the meaning of MPM? Okay, good. Let me recap. First, IFRS 18 never say you need to do MPM. No. IFRS 18 never say you need to do MPM. No, they never say that. IFRS 18 just says, if you have MPM like this, you look here. If don't have, no need. Okay, so now we assume An entity, they have MPM published in the annual report, in the website, in the press release. Now we want to look at this part of it already. So we check, is that MPM fulfilling this 14? Okay, yeah, let's say EBITDA, earnings before interest, tax, depreciation, and amortization. Earning before interest, tax, depreciation, amortization. Okay, this one. All right, it is earning. Earning is income expense. This one, yes. Is it used in outside financial statement? Yes, we tell investor, but not in financial statement. Is this about our performance as a whole? Yes. Okay. Is it not required by IFRS standard? Yes. Okay. It is MPM. So now, if it is MPM, what do we do? IFRS 18 says, disclose something. You disclose this one. Number one, everyone, what's the purpose of disclosure? The purpose of disclosure is to make investor understand something. Agree or not? Everyone, if you agree, you say yes. Agree or not? The purpose of disclosure is to make investor understand something. So now, the purpose of this disclosure is to help the investor understand MPM. So the disclosure must talk about, number one, what is this MPM about? Which aspect of financial performance is being communicated? In short, what is this about? Then second one, why is this useful to you? So, they want the management to say, you use this MPM, you then tell people, what is this? What is it about? Why is it important? Is that all? No. How to calculate? The formula must give. And not just that, you have to also tell the investor, my MPM and my subtotal in the IFRS accounting standard, a subtotal in the accounting standard is basically operating profit PFIT profit these kind of things. This called the IFRS required subtotal this one. So they say your MPM and the SOPL compulsory subtotal, the required subtotal, how is it related? You have to do the reconciliation. You need to tell people, my MPM is like this, I plus this, minus this, plus this, minus this, then equal to the IFRS figure. Then when people look at that disclosure, they will understand what is that MPM already. That's all. It's actually for understandability purpose, for comparability, because then entity can compare with other entity. Then relevant because it can help the investor to predict future cash flow. Conceptual framework, principle, all can apply here already. Everyone understand already? If you understand, you type 555. Can you understand already about this MPM? That's all you need to know. Okay? I hope it's clear. Any question on this? Everyone? Okay. Is this recon more than one subtotal? Cannot? Okay, Gracia. Actually, if company, they want to provide more than one recon, can but I don't think they want. Because you can reconcile to one, I think good enough already. Right? Why we want to reconcile more? Reconcile more? Because you need to show from this EBITDA, how do you match it to other figure? Like you already can match to one, you sure can match to others already. Like I don't think they want to put many I think put one good enough good enough because we need to know also. We don't want to put too many. Put too many later on the investor also mabok sudah. Don't know what you are doing. Okay, like why to include effects on income tax and NCF and reconcile? Okay, because they want to talk about how, because you see in our financial statement we have the operating investing financing then we have also tax effect, then also whether does it affect the NCI, like for example if it is sub-C one sub-C figure, we need to split between parent and NCI. This has to be informed to the investor as well, like how much is it related to NCI or what this one in theory can already, no need to know in detail how it works. The question may ask you to prepare a simple reconciliation. Simple one only. Simple one. Not a complicated one. So it's like, for example, EBITDA, then I need to just minus something, then I get the operating profit, for example. Or I minus something, then it becomes, let's say, PFIT. Something like that. So you just need to know a bit of reconciliation can already. This one just theory. Okay. Any other question, guys? Because that's all I want to tell you. Any other question? No more question, huh? Alright. Okay, everyone. If no more, thank you. I hope today has been a fruitful day for you. Okay. I'll see you tomorrow. Tomorrow we look at the question 1. Tomorrow, 7 to 10. Thank you, everyone. Bye-bye. Take care.